Kitco News Outlook 2024 is brought to you by iTrustCapital. Buy and sell crypto, gold, and silver with your IRA.
Hey everyone, I'm Jeremy Szafron and you're watching Kitco News. Now, as we navigate through 2024, the investment landscape is evolving with the equities market capturing some attention here. Investors are weighing the impact of economic fluctuations and global geopolitical developments, with the S&P showing notable strength. Now, despite a tech-driven surge earlier this week, we're seeing some momentum being lost. Gold and silver obviously continues to remain key focal points in times of economic uncertainty, and we'll get an outlook. Joining us today is Chris Vermeulen from the Technical Traders to help us unpack these dynamics and offer insights into what's in store for 2024. Chris, thanks for being with us.
Hey, always a pleasure, Jeremy. Great to be here.
Lots to discuss here. I'm excited. Let's start with equities, and I'm curious about your prediction on the stock market in 2024. Run us through your thought process, the indicators guiding your forecast here.
Yeah, that's a lot to unfold because, as you know, everything in the markets are interwoven into each other. So as one thing moves, it leads to another. But if we take a look at the charts, we've got the SP 500 here. We can see we had the big run up from the COVID crash way back in 2020. We got this major high in the stock market in 2022. And now the SP 500, which has been driving itself higher, trying to go up to figure out if it's going to break to new all-time highs, if it's going to put in a double top, or potentially both. Maybe we see all-time highs, we see followed by a big reversal and some pretty big selling. Based on my analysis using technicals, which is using price momentum, intermarket analysis of how different asset classes and sectors are moving, I think we're still actually going to see this stock market want to push higher and hit a new all-time high on the SP 500. And while the NASDAQ has broken to new all-time highs and the Dow, to me, the SP 500 is kind of the kingpin. It's kind of the overall market, the sentiment. It's kind of where the big money flow is, in my opinion. And I find if you can nail down and identify which direction the SP 500 is going, that allows you to go and navigate the rest of the markets from bonds to currencies, stocks, precious metals, because everything is kind of either flowing into the stock market or it's flowing out of the stock market into different assets like gold or currencies, things like that. So if we were to just take a look, just because it's pretty interesting price action, if we just look at last year's price action of the SP 500, you can see here it rallied up, topped out in July area, and then sold off into October. And then we went into the end of the year multi-wave rally. Now, a lot of people saw this and was caught off guard with this type of price action. But the reality is, if we look at the 30-year seasonality of how the SP 500 moves, you can see it typically rallies up, tops out sometime in the summer, sells off into October, and then we go into that multi-wave move into the closing bell. And this year right now we're in January, so we're back into a choppy, volatile state. And it's going to be very interesting to see how this market moves. We might see this stock market continue to want to rally and push up into May or June and put in a top, and then we could see a much bigger market correction going forward. Because what we've seen in the past, especially 2008, is the stock market can go up during these major bull market phases and pierce to a new high. This new high is going to be very critical. And to me, the SP 500 again is the key thing. So there's a lot of people betting on lower prices, falling stock market, and there's a lot of short positions. And there's also a ton of people who didn't participate in last year's rally because they were scared from 2022. And when the stock market hits a new all-time high, when the SP 500 does this, all those short positions are going to want to cover their positions and buy back those shares because the trend is already up. And if it's breaking all-time highs, there's technically no resistance up there. And so it's going to create this feeding frenzy, this surge of buying. And then on top of it, we've got all the people who have missed last year's rally who aren't involved yet. They're going to have FOMO, which is their emotions kicking in saying, I can't take it anymore. This market is taking off without me. Not to mention the headline news when the SP 500 hits all-time highs is going to be everywhere. And that'll be just enough to coax the average investor who's been on the sidelines bearish to buy in, get long, and that is going to create that push that could push us higher into May, and they, as they say, sell in May and go away. This could be that final big push. And I believe we're in this kind of double top phase where the market's going to pierce up just like it did in 2008, suck everybody in to get long, the shorts cover, and then the stock market went and ended up tanking, over 50%. If we just go back to the 2008 crash, you can see right up over here, it poked up to a nominal high only for a couple days and then sold off over 50%. So that type of scenario, I think, is unfolding. And there is a really good visual. I learned from Stan Weinstein many years ago, there's 4 stages to the stock market. And more or less, we're in a stage 3, what I call a topping phase. And this is a complacency move. This is a kind of, people are very bullish. They're moving back into growth stocks. We're seeing small caps take off. We're seeing tech and growth stocks take off over the past couple of months. But really, it's that last move before the market sells off. And, there's an emotional side to things here. Right now, people are in this complacency stage. And people are thinking, okay, 2022 was a bear market. It's over. We're going back up. We're starting a new multi-year bull market. But I really think we couldn't be much further from the truth. People, I think, are getting lulled into thinking this market's starting something fresh and new. But really, we're about to put in a top and start to head down into this stage 4 decline, which is a disaster. This was 2008 crisis. This was the tech bubble. These stage 4 declines are very dangerous. This is when a lot of damage, retirement accounts get destroyed, businesses go under. So that's kind of the scenario we're in the grand scheme of things. And the tech, as you mentioned earlier, Jeremy, has really led the way for this market. I think AI was a huge part of that. And if we look at the small caps like the Russell 2000, it is a very different story. It put in a major top back in 2021, and then it broke down, and it is in this complacency, this sideways pause. The next move for this sector or for this group of stocks is going to be a big move to the downside. And this is the reality of most sectors. The stock market indexes like the SP 500 and the NASDAQ completely cover this up because they're tech heavy. They're all trading up near the highs, looking really bullish. But most stocks, most portfolios are actually flat since really COVID, just because bonds have fallen, stocks are down. A good ETF that actually shows this is the ARK ETF. You can see you've got your big blow off phase, this complacency move, it's sold off. These growth stocks are really just bouncing up to the next resistance area. This is seen as a bear flag and pointing to the ARK ETF to continue to go down to about $16 a share. So a lot of people are getting excited. People have been moving in. The ARK ETFs have rallied over 30% over the past couple of months. Small caps like the Russell has rallied. But really, everything is just rallying up into resistance, getting everybody kind of all hyped up and excited and getting them long. And the market has a great way of, once everybody's long, then it's going to go in the opposite direction. And the SP 500 needs to, I think, poke to a new all-time high for that.
Yeah, history repeating itself, like you said. I'm curious, when you talk a little bit about last year, this FOMO effect, it seems like the retail audience wasn't really involved in buying. Volumes seem to be on the upcline here. So what are we seeing for those investors getting into the market? Is it a little bit of buying the news happening right now?
Yeah, I mean, I think the markets have gone up so strong. People are talking about the markets. They're feeling good again about their portfolios because they're starting to recover. Really, I think just because the markets have been going up, typically when there's a strong trend in play, it tends to drag other people in. It lures them in, just like, a bug zapper light. You put out that purple light and all the mosquitoes go to and get zapped. That's what this kind of rally is. You get volatility in the market and people want to dive in and say, oh, it's super volatile. I want to get in and make money. And this big rally from last year is starting to bring in the more passive investors to say, I got to get back in. I guess it's going up and I don't want to miss out on any more. So really, it's just noise kind of attracts investors. And as we get big moves, whether it's up or down, it seems to pull people to the market, and people have a natural bias to want to buy and invest.
Right. Now, you seem to be a little bit bullish on the outlook for gold and silver. Let's talk a little bit about gold first here. What you expect the key drivers are going to be behind this year with gold. I mean, precious metals are really in an interesting place here.
Yeah, for sure. I mean, if we look at the past year in gold, there's actually the seasonality chart is very similar for gold here. You see gold kind of move up in the beginning of the year, kind of flounders, and then into September or October, and then starts to rally. That is what we've seen in gold. And if we look on the chart behind here, we've seen gold sell off over the first week of January. And that's typically what happens when you look at seasonality wise for gold. The first week of January is generally weak. So I think we're going to see a little bit more strength in gold in the short term. It does have a very strong chart pattern. It's rallied, had a controlled pullback, another rally to a higher high. So this is channeling a series of higher lows and higher highs is the definition of an uptrend. And the chart is looking really good. When we go and look at the monthly chart, this one really paints the whole picture of what you should expect for gold, I think, over the next several years. In 2028, or sorry, not 2028, in 2001, we had the super cycle in gold really start. And then we saw it rally up and have a pretty big move. Now, I believe we started a new super cycle in gold in 2019, and it has had a rally, and now we're in this multi-year consolidation phase. Well, if you go back to 2006, gold went into this kind of multi-year consolidation. And just before the stock market topped, just as the stocks were putting in a major top, the indexes, and starting to trade sideways and head lower, gold, silver, and miners rallied up fairly significantly as that one last defensive play to move into. And I believe we could see something like that again. We could see all the precious metal space start to rally and push up. The caveat here is when the stock market does have a big correction and we go into potentially this stage 4 decline or bear market, we will see a big pullback in metals, and we might just see gold come right back down into this price range. So gold pulled back about 34% during the 2008 bear market. Silver pulled back about 60%. So there's a lot of volatility. The rally, if we get winning gold here over the next 3, 4, 5 months this year, it's going to be exciting. But what's really going to hurt is if we go into a bear market and gold pulls back, it's going to crush a lot of people's dreams, unless you understand that that is part of this process. And once the market cleanses itself from stock market, bond pricing, gold pricing, real estate, once we have that next financial reset, that stage 4, then we go into a huge rally in precious metals. Is one of the first commodities and kind of assets to hit the ground running months before the stock market does. And then we're going to see it take off. So understanding gold, silver, and miners could have a very nice rally over the next 4 or 5 months, but could also have a very sharp pullback. And understanding it could have a multi-year rally after that is very exciting. And that's part of what I really focus on, is trying to help investors and traders understand what is possible, what is likely to happen. And then when the market unfolds, we follow price and manage those positions. So, I'm a pure technical trader, and I don't try and pick tops or bottoms. I try to analyze the charts and say, okay, these are the two scenarios. It could go here to the upside. It could collapse down to here. And then we zoom in on the shorter term charts, and then we can actively manage these plays. So I'm bullish on precious metals long term. I'm bullish on precious metals short term, but later this year, we could see a big pullback in gold, silver as that one last pullback. That I think it'll be like the last opportunity to load up with physical metals before I think it's a moonshot. And gold miners will then become that ultimate opportunity that we haven't seen really since 2001 or 2009. So it's really exciting space, but this is the monthly chart. Every bar there is a month. These are multi-year patterns. So this year is a big transitional year of volatility.
Yeah, no kidding. Well, let's talk a little bit about silver. I mean, I could continue on gold. There's been such a fascinating path as we saw those numbers reach their highs in December. But when we look at the stepchild here on silver, which of course has both industrial and investment appeal, what are your expectations for the metal in the coming year?
Yeah, I think silver is going to do much of the same thing. I think we're in this big consolidation. It might have a squeeze up with the overall if money starts to get nervous in the stock market, we might see this rally up with gold. We saw the same thing just before the 2008 stock market top. We saw silver pop. It did pull back 60%, but then once the financial system was cleansed, it went into that rocket ship and played catch up with gold. That's the thing about silver. It's super volatile. It can underperform like it is now. It is down about 50% from the highs, where gold right now is testing at new all-time highs. So it's held its value, but silver has a great way to play catch up and can blow past performance-wise for gold, which is why a lot of traders love silver. It's just these cycles in precious metals and the economy super cycles, these things usually take like a decade or two to unfold. And so the key is to identify when we're starting a new one, ride it up. But when it's done, you got to forget about it and find the next space. So I think there's a lot of opportunity here. You mentioned industrials. It's really interesting because the industrial space, like XLI, the industrial ETF, it actually is considered capital goods. So it's equipment, machines, things people are buying, and for their companies to invest in. This sector generally does really well. It actually follows suit with gold during the late stages. The stock market might put in a top, but gold and industrials will move up. And what's interesting is they're both long-term investments, but they're both physical assets. They're companies buying pieces of machinery. And that's because the way the cycle works, the economic cycle and the stock market cycle, and obviously the emotional cycle, businesses are generally behind the ball. Right when they think everything's booming, they're doing really well, they decide to expand their restaurant, their business, their factory, they buy new machines, and they do that right after they just had a huge growth spurt, yet they don't realize, the end is coming. We're going to go into a recession. And so we see industrials do really well because people are upgrading their machines and people are buying into these industrial stocks and driving it up. So there's a very interesting connection between physical, capital good stocks and the price of gold. They're very interesting plays.
Yeah, we talked a little bit, Chris, about small caps. I just want to talk a little bit more about this. I mean, they've had an underwhelming performance, obviously, lately. I'm curious about what your take on small caps is for 2024. What investors might expect. Is this going to be a year where some of these small cap stocks might break out?
There's always going to usually be like one sector, one pocket,
Right.
that can buck the trend and kind of go against the market. So, when we're looking at different stocks, if we were to actually look at one here, if we were to look at the biotech space has been on a tear. It has a very strong chart pattern, just kind of series of bull flags. And we're seeing money pile in. We've got very strong accumulation. People are buying shares and just holding them. So the biotech space is really starting to break out. It's starting to get above some of these highs, and it's got lots of volatility, lots of volume. So it's one pocket that could be all right, but in the grand scheme of things, I always like to look at the stock market like the ocean. So I'm a surfer, and if you've ever walked down the beach near an ocean, you always see surfers floating out past the break, and that's because they're waiting for that next set of waves to roll through. The stock market is the same. I'm waiting out there for a clean wave, the next set of waves through assets that I like, whether it's an ETF, index, whatever it is, or commodity. And when we see those big waves coming with power and clarity on what they're doing, we can jump on, we can ride those investments. And the nice thing about catching something that has strong movement is that we can also tell when it's starting to lose power. And so we know when to step off and get back into a cash position or look for another opportunity. So it's really difficult right here. I think the biotechs are on fire still. I think technology and small cap stocks are still actually going to have a pop and a push higher. I think there's still some opportunity there. I don't think there's a lot of upside potential in the market. And if we use just a technical of Fibonacci extension, which is something I use and it's extremely accurate, we can identify where the downside target, the first downside target for small caps like the Russell 2000 index, it's about a 30% drop from where we are right now. And that is just a healthy, typical price action move for this chart pattern, this monthly chart. So there's a lot of downside potential. If the small cap index drops 30%, that means most individual little stocks are dropping a lot more. So this is one of the things where a lot of investors need to realize if the tide is going down, it brings most stocks down with it. And you're best not to try and find the one that's going to buck the trend. It might only last a little bit. You might not pick the right one. There's 2,000 ETFs plus. The odds of picking the one that'll do well isn't worth it. If the market is going down, you're much better to find an asset that goes up while the stock market falls. Could be the US dollar index ETF, could be an inverse index ETF, but you're better to take advantage of the underlying trend, the tide. Is it going up? Benefit from long positions. If it's going down, find things that profit from falling prices. So I'm not looking for that one hidden gem. I just want to know which way the tide is going. And then I play assets that I understand that and can follow very clearly.
Good analogies there. Now you make me want a beach. That's all I'm thinking about right now. I'm curious, obviously in these volatile markets, what are some common mistakes that you see traders make often, and how can they be avoided, especially while investors are looking for guidance here?
Yeah, I mean, one of the biggest things is, there's a couple things. The two key ones that really stand out are when there's big price movements in anything, any asset class they're following, people tend to think it should have been traded, it should have been caught, we should have profited from it, especially if it's a very sharp move, which is usually based off news or some knee-jerk reaction thing. The reality is, if you want to manage your risk and have consistent returns, it's not about trying to catch the noise, the chop in the market. It's about trying to catch the larger waves and cycles at play and getting about the day-to-day Fed news and earnings and unemployment and all that stuff. Just follow the underlying trends and hop on board when there's a clear trend to the upside. And so, like I mentioned before, the volatility seems to bring people into the markets and makes them want to take part. But that's actually when we're actually stepping away from the markets and moving to slower things. So I trade like a hierarchy of assets, with the US stock market being our top most volatile play. And when it falls out of favor, we actually move down the hierarchy to different assets that move slower and slower and slower. And that's how we protect our money. And as we're moving to slower assets, typically the stock market is like going absolutely wild. People are losing their shirts or making a ton of money that is more so just risk and a game of chance because they're playing some extreme volatility. So that's the one thing, is don't think you can catch every move. It's not about trading more. It's about trading trends and managing positions. The other thing is a lot of people just jump from strategy to strategy. Now, actually kind of show it on this document here is there's different stages in the market. And depending on the stage that you're in, there are different types of strategies that you need to use. And so when you're in a bullish phase, you can really do a lot of strategies. You can pretty much throw a dart, at any board and hit a stock going up. But when you get into a topping phase, things are choppy, sectors aren't really rallying, or they're short-lived. You need a different strategy. When you're in a bear market, you need a different strategy. And a lot of people will see strategies that are doing really well. They pile in, they start following a strategy, but really that strategy has just come to an end. It just had a big run, and they jump into a strategy just as that market trend has finished. And typically people jump strategies just as the market is changing trends, because the market has a way of making people feel like they need to do something to take action and take advantage of this. And that's usually right when the market changes. So people are getting very bullish right now in the stock market. I think they're about to get super bullish if the stock market hits a new high. They're going to buy onto the long train and start using options and leverage and all that stuff. And you're going to probably need to have a strategy that can profit from falling prices and volatility, the exact opposite of what they move to. And so they give up on a strategy literally right when it's about to start working again. And so they're literally jumping from one strategy to the next at the worst possible time, just because they're trading off emotions, and the market has a way of just really playing with them and sucking them in emotionally, which is what the market does very well.
Yeah, well said, my friend. Chris Vermeulen from the Technical Traders breaking it down for us. I hope you can find us a board soon and hit some waves here, my friend.
I just got back from 3 weeks with the kids in Florida, so that's why I'm super golden tanned. We did lots of surfing, playing, fishing.
All right. So you're ready. You're ready for some ROI here on this year.
I am, yeah.
All right. Thanks for coming on and giving us your outlook for 2024. Lots to look out for. Thanks again, Chris. I'm Jeremy Szafron, and thanks for tuning into Kitco News. Be sure to subscribe to our YouTube channel for the latest market news, and don't forget to download our app as well. We'll see you next time.
Kitco News Outlook 2024 is brought to you by iTrustCapital. Buy and sell crypto, gold, and silver with your IRA.